Hi, welcome back. Mitch Argon here with Calneva Realty. I'm going to take you through the greater Reno Tahoe real estate market in just a few moments. Okay, let's get started. We'll start with the median price like we do in all prior months. Take a look at February of 2025, which was last month. And you can see that across the region, markets were mixed, slightly up, slightly down. Tahoe was up substantially. That is not a reflection of a trend. It just is really more of a reflection of a very small sample size. So the prices are larger, and so they tend to fluctuate more. But in general, pricing is fairly stable, modestly up. Is kind of the trend line that we're working with. We'll touch a little bit more on that in a bit. This shows you what the prices look like by each of these markets over the last couple of years. And so you kind of see what the trend line looks like. And this month, I thought it would be interesting to actually pull what was the original high water mark, which was the peak period of the low interest rates. And that was around June of 2022. So we're nearly 3 years into this elevated rate cycle that we're currently in. And you may want to stop the video and just look at these numbers here. 635, for example, to 615 last month. Not quite as high as that 635. We've had a few months that have been higher, but not substantially higher. So my point is, if you look at this by each market down here, is that for most markets that we're looking at in our region, we have been fairly flat if you look at the middle of 2022 to here early 2025. And they came down a little bit. Prices came down just a little bit in late 2022, early 2023. They have recovered, and they're at or slightly above where we were almost 3 years ago. So just keep that in mind as you're looking at the markets. Prices have been very stable for nearly 3 years, which is rather unique compared to the prior, maybe the prior 10 years prior to that, where prices were rising pretty much every year, in some cases very rapidly. Homes sold, we are seeing more homes sold this year than we were seeing last year. And you can see there's a mix there by each market here on the chart. Sales volume is not up dramatically, nevertheless, and that's partially due to the elevated rates, keeping home sellers locked in and not listing homes, and buyers on the sidelines. So nothing really new there. Month supply of inventory, you can see still, for the most part, very low. The 3.2 is starting to flirt with a neutral market, but this Carson Valley market has been elevated. You'll see in a chart here in just a little bit, elevated over the other markets in prior years as well. So it's kind of just going to run a little bit higher. Tahoe, again, at 4.3 is really not, the metrics don't apply to Tahoe like they would to a primary home market. So that number is not going to be as meaningful, although it's up a little bit from last year, up 19%. Inventory, you can see we're up compared to where we were a year ago, and I'm going to show you a chart here in just a moment that shows inventory relative to a year ago and then also 2 years ago. And so for a number of months in recent history, our inventory levels were up over a year ago, but they were still down quite a bit compared to 2 years ago. We're starting to counterbalance that. You can see here, at least with Reno, which is the blue line and the highest market, largest market with the highest inventory, 458 currently, 346 a year ago, and 377 2 years ago. So we're actually exceeding where we were 2 years ago. Inventory is creeping up. Again, if you look down at Spark, 223, 138, and 205, we're higher than we were at the marks of 1 and 2 years ago, and so forth. So as the demand is picking up, the volume is picking up a little bit, so is the inventory slightly picking up. Markets are remaining pretty balanced, as you saw from that month supply of inventory that we just looked at a minute ago. Month supply of inventory, this is the chart that shows the Carson Valley market elevated above the other markets in the region. And you can see that same phenomenon happened in 2023. So it tends to be a little more elevated than the others on a cyclical basis. And it's really hasn't broken out of this pattern substantially. Here we're in the low threes. Here we're still in the low threes again, low to mid threes. So the markets are pretty stable. favoring sellers in the current market. Here's a chart that I want to share this month. This is not a standard chart that I typically use. This is a chart that was shared at a recent economic development of Western Nevada, or EDON, had a presentation, kind of a state of the region, if you will. And this is one chart that I pulled out to share here in my presentation. I did not create this, but I just picked it up. And the thing I want to point out here is you got the 30-year fixed rate, which many of you maybe have lived through in the early 80s, that got very elevated. You can see it's come down, got way down here during the COVID period. And then it came back up in 2022 and has stayed elevated around 7%. It's dropped down just a little bit in the last two or three weeks, but it's kind of more closer to 7% than 6%. This effective outstanding rate shows you the current rate plus the rate that people have on their current mortgages. So it's weighted down in this case because as rates were elevated, fewer people were taking these higher rates, and many more people had the lower rates, and so your effective rate was below the actual rate. And you can see back here some time ago, late 70s, very early 80s, this gap was quite large. That was probably, I was not in this business at that time, but that was probably creating probably somewhat of a recessed market in terms of volume, because you had this lock-in effect. I have heard that during this time there's a lot of assumable loans. People would assume a loan because they didn't want to take this high rate here at the 18%. They were assuming loans that were down here in the lower rates. Fast forward through a few decades and get to where we are right now, and you can see that our effective rate is 4%, but our actual rate is more like 7%. So this gap that we have here is really what's driving the market right now. This gap is what's creating this lock-in effect, and that lock-in effect is what's keeping the markets in check between supply and demand and keeping prices stable, which you saw. Now, what's interesting is that I don't think these two lines, when they converge back to each other, like you've seen here for many, many, many years, when they're fairly convergent, then the markets will probably start to loosen up as we're moving towards convergence. Loosening up means you'll see more sellers selling homes because they are going to be buying a home that's going to be more in line with where they have been or where they are. You'll see better affordability of homes as well. And so we're nearly 3 years into this elevated rate rise that happened in late 2022. So later this year, we'll be in a 3-year window, and we'll see what this chart might look like. But it's probably not going to change anytime drastically in the near term. It's going to take probably a short number of years to work through this gap until the effective outstanding rate and the fixed rate converge or get close enough to converge so that we can start to get past this very tight market that we've been in. Again, this tight market, if you think about volume, we're down 25-30% currently in these years, 2023, 2024, compared to where we were through all of this period through here, 15, 16, 17, 18, 19, and so forth. That's sales volume. Prices have remained stable. So this is just one way to look at why we're having this market that we are. I thought it was an interesting view, and I thought I'd share it with all of you. That's it for this month. I hope this has been useful for you. Fresh look at some things, and the markets by and large are fairly stable. If you have any questions, please post it down below on YouTube here or reply to the email you may have received. Please, of course, feel free to reach out to any one of our agents in our Reno or Carson Valley offices. And the full report is down below on a link. This is just a snapshot of the full report. It's about 40 pages long. If you want to dig into data, it'll have more detailed data by each market. So until next time, thank you very much for listening, and we'll see you next time. So long.